Hey guys, this is Andrew Keene from KeeneOnTheMarket.com. This is your ES Mini Whoop Whoop Rally, Oil Rally, Euro Rally, Market Recap for June 29, 2012. What was today? End of the quarter. News came out from the EU summit that basically said they're going to give more money out. Shocking. Going to give Spain more money. Just keep printing the money. Gold up 50. Oil up 7. SPOOs up, or the ES Minis up 33 handles. Dow 277 points. Is it ironic they did this the day before the quarter ends? Gives something for the market to rally as the quarter ends. I think yes. I might be called a conspiracist, but I think this is a reason it happened. A lot of times we see this. The day after the VIX expires, we see a big sell-off. The day after a big month has been around for a while, we see a sell-off on the Monday after the options expire. Day before the end of the quarter. Makes me shake my head. Anyways, let's look at the daily chart for the minis. Technical buy signal on our proprietary software. We have a buy signal on the close of the bar, 1356 half. My stop would be right about 1335, risking 21 points to the downside. If I took a trade on the daily, target 1419. So I could stay in this trade. I would put a stop down 21 points. So I'm hoping to make 60 points before I get stopped of 20 points. This is a buy signal on the daily. We had the last buy signal we haven't had it for a while. We technically had a short signal on the close at 1351. We were going to risk all the way up to 1396, 45 points to get down to about 1280. So that would have been a good trade. This is on the daily. Let's look at the 5-minute chart for the ES Minis. Very, very quiet day all day. And then at the end, short squeeze. So if we just look to see where we open today, we opened up at 1346 quarter. High or low 80% of the time comes in the first hour. We got the low today, 1342.75. High of the day was at the end at 1357. So it gave us a 15-point range. We were sitting here all day. Which way we're going to break? Were there going to be more people that were long this market that need to sell it and take the market lower and take profits, or are there more shorts out there that we're going to get squeezed at the end of the day? As there's more shorts than there's more longs, people get squeezed out of the market and they have to cover. They get tapped on their shoulder by their risk managers. I don't think so. You have to actually cover this before you go home. So big, big rally today. Let's look at oil. 5-minute chart. Same thing. Open, low within the first hour, then it's off to the races. Oil hit $85. Now, I've been talking about oil, and I was talking about on the daily chart how it'd actually be a seller right around here. I didn't take this trade at all, up $7 and into a weekend. If it wasn't the weekend, I probably would have taken it. So I could sell 85s, put up a stop probably right around 88.50. So risking about $3.50 to potentially make all the way down to 78. So I'm risking $3 to make 6 to the downside. 6.5. 6.5. So risking 3 to make 6, and I think it sets up as an even money risk versus reward, which means I should take the trade. If I can risk 3 to make 6 on an even money bet, it's a great trade. Let's look at the euro. I came in short the euro. I've been talking about being short the euro. I continue to be short the euro. I actually sold more today. So the euro, huge spike higher. I'm going to have a stop. I have a mental stop, but I have a stop either 128 or maybe a little bit higher, 129. But I sold more euro today, around 126.60. Actually, when I came over here, walked over here, I got filled on a partial at 126.41, and I sold some of that at 127. So I've been piecing in. I didn't get run over today in the euro. I sold it basically where it is right now. I am technically shorted from here, so I have been taking I have had profits on. I just gave back those profits that I had on in the euro. Unusual option activity, not I really want to talk about, but I want to talk about one this other day. STZ, and I was talking about the other day, they were buying July 20 puts. And I reiterate, if you're in the live trading room, or if you want to try out the live trading room, you can email sales@KeeneOnTheMarket.com. If you guys want our webinar on how to read order flow, this is very, very important. STZ, puts being bought. Over the course of the last 3 days, puts being bought. And I reiterate, I tell you once again, just because puts are bought, this doesn't mean it's a bearish position. Sometimes puts are bought against a long stock position. If I wanted to initiate a long stock position, I was a hedge fund, and if I knew the stock was going to go higher, okay, I don't want to worry about the SEC coming after me to say, hey, you just bought the stock 5 days before earnings, and the stock went up $5. What would I do? Well, let's buy some puts, lose our money on the puts, and then have the stock rip higher. So STZ, huge amount of puts being bought, and I talked about this. We had a technical buy signal at STZ at 2210. I would have to risk down 1950 to I'd have risked down to 1950. Boom, $27. So now this fund that is long stock can say, hey, but I was long puts too, and the SEC doesn't get it. So just because puts are being bought doesn't mean it's a bearish position. One more I want to talk about BUD. Same thing the other day. July 70 puts were bought the other day, and I talked about it. Puts being bought. We had a technical buy signal here. Puts being bought because they want to get short, or puts being bought because they want to get long. Look at that. Up $7. 10%. Throw those puts away. They're worthless, but you got all your long stock. This is Andrew Keene from KeeneOnTheMarket.com. We are going to have a webinar July 8th on earnings, how I trade earnings, implied vol versus historical. If you want to know more details, you can email sales@KeeneOnTheMarket.com. It will go over earnings. It will go over 5 earning plays for the week: Alcoa, JP Morgan, Marriott, Yum Brands, and one other one. So this will talk about implied vol versus historical, how I make trades based on the charts, based on the order flow, and based on the volatility. This is Andrew Keene from KeeneOnTheMarket.com. Have a great weekend. I can't wait for the new quarter.